Friends, now let us understand clause by clause valuation as per Rule 11 UA and why as per Rule 11 UA, because in our experience, and I'm sure it must be experience with it must be experience of everyone who are on this session. uh, Rule 11 UA is most commonly transacted rule, and that is why let's focus and understand this Rule 11 UA clause by clause. And I would urge every one of you, please feel free to interrupt me at any point in time with your queries, doubts, and questions with regard to each and every clause that I'm going to discuss as part of this discussion. Absolutely feel free. You can unmute yourself and you can raise your question or raise your doubt. So, Rule 11 UA basically for the determination of fair market value, uh, it gives broad methodology for determination of fair market value in respect of most of the assets in the Income Tax Act. So, Rule 11 UA1 and UA2 elaborate methodologies for determination of fair market value. As we have discussed already, it is applicable in respect of all valuations related under the Income Tax Act. What is the valuation methodology to be used? It will vary from asset to asset. We will understand that. Who can do the valuation, that also will vary from the asset to asset, and that is also we will understand. So first of all, let's look at Rule 11 UA1. Rule 11 UA1, it gives methodology for the valuation of number one, jewelry; number two, archaeological collections, drawings, paintings, sculptures, or any work of art; and also shares and securities. So that's your 11 Rule 11 UA1 covering these assets. Uh, Valuation methodology, as I said earlier, will depend vary from case to case, and who can do the valuation will also vary from case to case, and that is what we will understand one by one. So let's understand valuation of jewelry. How the valuation of jewelry be done under Rule 11 UA1A. So the fair market value of jewelry shall be estimated to be the price which such jewelry would fetch if sold in the open market on the valuation date. Meaning what? Meaning you are trying to do the valuation of a jewelry for which there is no document available whatsoever. And since there is no document available for whatsoever, how to do the valuation? Because there is no document on which you can rely. Since there is no document on which you can rely, you will do the valuation on the assumption that if this was to be sold in the market today, that is on the date of the transfer, how much money would it fetch? And that becomes the value in situation 1. Situation 2 talks of a situation where there is a document available, and that is there is an invoice available. So if there is an invoice available, then the and that invoice is from a registered dealer. So when you have bought a jewelry, and you have bought this jewelry from a registered dealer, and since you have bought it from the registered dealer, and therefore the invoice becomes the basis for the purpose of valuation. So what it says is, in case the jewelry is received by way of purchase on the valuation date from the registered valuer, the invoice value of the jewelry shall be the fair market value. Only one point that I would like to mention here. Remember, if your client bought jewelry 5 years back, 10 years back, 3 years back, 4 years back, or 2 years back, can that invoice be used for the purpose of valuation of the jewelry? In my view, answer is no, because it talks in terms of the valuation date. So when it talks in terms of the valuation date, which means reasonably one can expect that the jewelry that you're trying to value, if it has been bought in the recent past, right? And that's where the invoice can be considered for the purpose of valuation. But if the jewelry was bought 5 6 years back, 3 4 years back, or 2 3 years back, even for that matter, then the same invoice will not hold good. And what you will need to do, you will need to do the valuation based on, if this jewelry was to be sold in the market today, how much or on the transfer date, how much money would it fetch, and that will be the valuation. The third situation is in case the jewelry is received by any other mode and the value of jewelry exceeds rupees 50,000. So you have not bought it, maybe you have got it by any other mode. So in that, and the value of that jewelry is more than 50,000. In that case, what we would need to do, for the purpose of valuation, is the assessee may obtain the report of registered valuer. So registered valuer who is registered with the income tax department under section 34AB of the Wealth Tax Act 1957. Someone who is registered with the income tax department under section 34AB of Wealth Tax Act 1957 for the purpose of jewelry. And I'm sure all of you would be aware that for different assets, there are a variety of assets, one can get the registration done under the income tax, following the guidelines and the rules given under section 34AB of the Wealth Tax Act 1957. So in third situation, where the jewelry is received by any other mode, what you will need to do, you will need to approach income tax registered valuer for the jewelry, and you will need to obtain his report, valuation report, and that will become the basis of valuation in case of jewelry. So in case if there is any question, please go ahead, else we can move to the next topic.